Good morning, everybody. Welcome to the Flow Show. It's Tuesday, 10th of October. Morning, K-Man. How you doing, mate?
Hey, good morning, Ryan. Good morning, everybody. Yeah, here we go again. Another day, another dollar.
Yep, definitely. Well, hopefully another dollar anyway. Been a bit. There's been a few moves this morning, but it seems like we're just hitting a bit of a quiet period in between any events and speakers and data and whatnot. Sorry, just getting the BOE F.A.C.E report out, financial stability report out.
Yeah, exactly. I was just reading a couple of lines there too.
Yeah, it's nothing on monetary policy. It's all this, that, and the other to do with financial stability. I'll let you look at those headlines and tell us if there's anything in it.
Okay.
In the meanwhile, we will go to China. According to press reports, China is going to weigh some new stimulus and increasing their deficit so that they can meet their growth target. This stimulus is of the fiscal nature, i.e. they're going to issue more debt to raise money to pay for new infrastructure, you know, the usual stuff, roads, waterworks, sewage works, this, that, and the other. So yeah, further stimulus potentially from those guys, which they can do. If you want to fix your GDP number, you issue more debt, you raise a load of money, and you go and tell 300,000 Chinese to go and build a load of shit. And that's one surefire way to get GDP activity up, because all that activity, infrastructure works, adds to GDP. So if you want to, we always talk about whether the Chinese fix their data. This is another way of fixing their data. They just go and build their way to GDP. So that's what's potentially coming from those guys. Over in Japan, Finance Minister Suzuki says that the current weak yen is due to the yield differential. But the story of the morning was Kyodo reporting that the bank might raise their fiscal year 2023 CPI or price forecasts to near 3%. It's currently at 2.5%, that forecast, which was up from 1.8% in the April forecast. So the 2.5 was their July forecast. This is going to be updated at their next meeting, apparently, and they're going to move it to near 3%. So this is again the Bank of Japan thinking that inflation isn't going to pull back as they expected in the latter part of the fiscal year. Inflation's still sticky around 3.2 to sort of 3.3%. Now, perhaps more surprisingly is that the yen didn't react to that. It has moved higher this morning. Looks like a general bit of dollar bid, but yen pairs are all up as well. Yields have bounced a bit, but you might have expected to see a bit of strength in the yen on that, because if they are coming round to the idea that inflation is stickier than expected, it potentially pushes them closer to doing something with monetary policy. Your thoughts, Kay?
Yeah, I mean, I think with there's this whole mix of stuff going on again. Suzuki saying that it's a result of interest rate differentials. This looks to be like a step back, right? Versus prior interventionist rhetoric. And I reckon that then you couple it to higher equity markets, yeah, with a bit of risk on, perhaps the situation in the Middle East. This market is really quite sanguine and numb to events for more than if it were not for more than a session or two.
Yeah, maybe that Suzuki comment, as you say, it dials back on the, you know, it's now not excessive moves, it's now weak yield differentials.
Yeah, so that's a step back, right? And perhaps that's what the market then understood as well. Yeah, on this Kyoto thing, there was a bit of confusion as well. And just want to comment just one minute on that, because there is Outlook and target, and it's a very, very different thing, okay? Because we saw some confusion about the outlook in the target, because if Bank of Japan would raise their target to 3%, that means that at 3%, they don't have to do anything. And that means that monetary policy normalization, forget about it. And the yen is going to get tattooed on the back of it. And then Suzuki has to go back to work. But if it's the outlook, that's the opposite. That means that if they really would change their outlook, that means that opens the door actually to normalization in theory, because they acknowledge that, as you rightly said, they acknowledge that the inflation is going to remain higher for longer. So that would give Ueda then the possibility to normalize. But you know, I guess as well, and it's just a guess, you know, because we are not in the head of all those big players and stuff, and I'm not even sure if there's many really big players involved in the yen right now, or it's more like algo stuff. And but they probably think that it's even if they revise the outlook, they're not going to normalize on the next meeting, right? And I reckon because the market has been burned to try and price Bank of Japan normalization a couple of times, they now say like, well, we're just going to wait until it happens really. And I reckon that is then the reaction that we saw in the yen pairs. But I'm quite let's say in a way surprised that dollar yen is not that bit lower compared to it's actually higher than where we left it yesterday, right? That it's not lower on the back of those US yields coming off, because that is normally a factor where the dollar yen is plugged into the US 10s, for instance, which came back another, what is it, 10 BPs or so since yesterday. We're on support there now, so that's the bit of surprise element in the dollar yen, especially. So this quite this mix of stuff going on, I reckon, and that's why those like really headlines about inflation and stuff have probably been pushed to the side a little bit for now.
Yeah, exactly. And I actually just laughing at a comment that's just popped up on Reuters saying that cable has jumped to a 12-day high on the China stimulus report.
Oh yeah,
as a surefire message to know that market commentators don't have a clue what's going on right now. Because the day cable jumps on China stimulus is probably the day we should all give up trading. But there you go. 2 + 2 equals 750 in that sum. But anyway, yeah, all valid points on Japan. And I suppose we have to wait and see now. Are they going to move it to 2.8, 2.9%? You know, it's almost like they're creating a magic line at 3% now. You know, they don't want to go above it because would that indicate something as well? But we shall see. As I say, those forecasts will be coming in the November BOJ meeting. Right, moving on over in the UK, and this is something that's going to be valid for the next month or two in the US particularly as well. The Amazon UK are going to look for, or have started recruiting for, over 15,000 seasonal roles in the UK for the festive period. That is something, just this modern day and age now, we're going to see impacting the US jobs numbers as well, because obviously we have Thanksgiving and Christmas and all that sort of stuff. So the November, December periods become busy for increased workers or not, depending on how they feel over there in America, but it can play into the jobs numbers as well. So maybe we get some further strong NFP numbers, especially next month for October's data. On the wages front, from the 15th of October, they're going to increase the minimum starting pay to £11.80 and £12.50 from April 2024. They're going to increase that further to a band of £12.30 to £13. and that's going to be per hour. So some wage increases coming in at the minimum levels there, starting levels for people joining Amazon. Keeps inflationary pressures in the pipe for the BOE. BOE's man was out yesterday talking about wages and price inflation, saying they are sticky downwards. Concerned about how long inflation is above target, and she says that a possible drift in expectations implies that policy has to be more aggressive. So staying on Hawkish Street for Elizabeth Mann there. Keeping to prices, the latest Kantar retail report said that grocery price inflation fell for the 7th month in a row to 11%. That's in the 4 weeks to the 1st of October. That's the lowest rate since July 2022. And for the first time since last year, prices of some staple foods are now dropping. That might be in part because promotional sales are at the highest since June 2022. And a little bit of a potential nod for retail sales when we get the next report for September, that the warmer weather has prolonged the sales of summer staples. We've also just, we're in the mid of a bit of a Indian summer here in the UK. It was very warm this weekend, and for the past week, good weather. So that again may boost retail sales, maybe for September numbers and into October. So we'll have to see that. But definitely the barbecues aren't being packed up and shoved in the sheds just yet. Over at ECB Towers, well, the French ones anyway, Villeroy says that interest rates are now on a good level, and it's not desirable to raise rates further. A bit of a repeat of his position. Now, Italy's getting into a bit of a pickle. That's why I had Italian yields up on the first blanche. As you can see there, much higher than the rest of the Eurozone, other countries in the Eurozone are among the majors. There are reports, according to the press, that from ECB policymakers, that they consider the rise in Italian bond yields are justified because of deteriorating budget fundamentals. They see no urgent case for ending PEP reinvestments and say discussions should be put on ice. As far as going back to Italian problems, it says that no current discussion about activating the transmission protection instrument. The Bank of Italy has come out saying rising yields must reinforce efforts to adopt a sound budget. So there are some signs of stress. It's looking a bit Liz Trussish over there in terms of what they're doing with the economy and the market's view on that in judging about the level of interest they want from Italian debt. ISTAT was out with some comments on the economy, saying that most recent Italian economic indicators suggest that the weak economic phase will continue in the coming months. Italian economist wasn't happy with that so much, saying that most economic indicators suggest that a gradual return to growth path is possible in the second half of this year. So the Stats Bureau saying weakness will continue. The economy minister saying that growth is possible in the second half of the year. I'll let you believe which one you want. On the data front, not a lot out. Italy was out with some industrial production numbers, actually, seeing as we're in that zone, if I can find them. Where are we? Why are they not on there? Oh, there they are. 0.2% rise on the month, beating expectations of a flat number, and not so bad on the year, only down 4.2%. So a small bit of positivity, but again, we're just circling around that zero flat line number. Kay, I don't know if you've picked up anything about this Italy stuff. It seems to be coming to a bit of a head at the moment.
Yeah, I haven't really picked up much, but I'm just looking. I'm always keeping an eye on the spreads really between Italy and Germany mainly, they are turning around the 2% mark. It's not really enormously stressful right here and now, but we have to note that since the start of the end of September and the start of October, those spreads have been widening out. So you know, in former year it was a bit of a thing that the market was looking at to judge strength of euro in a way as well. And but we're holding around that 2% mark. I think it's just like regularly there's Italian stuff coming out. They can't keep their act together for longer than a couple of months. So yeah, I mean that's really all I'm reading into it. Is it gonna get worse? I don't know. I really don't know. Perhaps Magic's in our room can comment.
Yeah,
on
I was going to
that.
say.
But
He's a
perma player on Italy, being himself an Italian. So
yeah, we'll have to badger him about it. As I say, I've got to do it before the show started, so we'll tug his chain about that. He knows what's going on. Our mate 5 Magics over there. Anyway, moving on from Italy over to the US. Fed's Logan, I wouldn't say causing a bit of a stir, but the market, probably for the want of any other headlines to jump around on, has picked up that Logan was potentially a bit of a hawk, and comments yesterday maybe put her into the more dovish camp, saying that higher yields may mean there's less need to raise rates. But then said too soon to say whether inflation is reaching 2% in a sustainable way, and far too soon to think about rate cuts in terms of strategy. Fed's Jefferson says recent inflation data is encouraging but remains too high. It may be too soon to confidently say we've tightened enough to reach 2%. We can proceed carefully, though, amid better risk balance, and is unable to say if rate cuts might be needed next year. Now, there is an absolute flood of speakers coming this week. My pal Michael Brown had a little tot up, and he started shaking in fear at the amount of speakers. So we've got another flood today and a flood the rest of the week. So lots of waffling on from those guys to come. Over in the strike front in the US, General Motors is going to lay off an additional 200 workers due to the strike impact. Not a big number, 200. But obviously it's job losses, and given how long the strike goes on, this may be becoming more prevalent, and that might become more prevalent if there's an agreement for higher wages, better terms for workers. If they're going to have to find a way to pay for it, it can mean that we see some bigger job losses. The auto industry, not the only sector, as we know, that are facing strikes. The healthcare sector, also with that 75k lot that went on strike for 3 days last week. That's all it I can see from the news. Bit of a quiet one. Kay, any other gems you've spotted amongst the rough?
Now, you mentioned Logan and Jefferson already, but there's Dali as well. And they all, because Dali and Logan were supposed to be hawks, right? And they all seem to align, saying that the latest rise in interest rates, especially on the on yields on the long end of the curve, has done a lot of work for the Fed, and so that struck a bit of a dovish tone from all of them, hinting, for them at least, that the Fed is, and the market understood it that way, that the Fed is done for now. Which brings me back to dollar yen a bit surprisingly keeping higher where all the other dollars are suffering a bit. So I think that's something that we should keep in mind going into the PPI tomorrow and the CPI on Thursday. But not only that, I'm going to show the US 10s there in a little while. We are on support. What I make of it is that we will have to be very careful with what happens. Okay, you can include the 30-year as well, but the 30-year is sometimes a bit difficult more difficult to read, but has to be said that we tried several times the 5% on the 30s and kept over there as well. Now, why is all of this important as well? Because this week we will have again US Treasury issuances, and especially if you look at it, they're going like across the curve this week again. So the more important ones to watch will be the 3-year for the shorter end, but then there is a 10-year and there is a 30-year as well. So keep this whole thing, this whole package in mind with the Fed speakers, especially those two, Dali and Logan, going a bit more dovish, plus the CPI, PPI coming out, plus those issuances, and those issuances actually, and they will start today with the 3-year, and then we have the 10-year tomorrow after the PPI, and we will have the 30-year on Thursday after the CPI. So if you look at, it's going to be a very interesting watch to monitor how those issuances will go, because if this market thinks that yields have gone far enough, those bond auctions should actually do pretty well. But where in the past, if bond auctions, when we were in the process of rising yields, in the process of the US exceptionalism, yeah, exactly that page. When we were in the process of the relatively well performance of US bonds issuances could have been seen as a sign of confidence in the US economy. And I reckon that psychologically something may change in that line of thinking, that is, if the bond auctions go really well this week, it may be somewhere a sign that the market thinks that the yields have gone far enough. So it's going to be an interesting watch, in my opinion, and I would not dismiss those issuances too fast, and because they could into and post the results, they could create some waves. So I think it's going to be an interesting watch.
Yeah, especially as this is a quiet week. You know, the market, if the market's jumping up and down on things like cable moving, on China stimulus, you know, something like auctions are going to be bigger news.
Wow, reasonably speaking, that's a bit of crap, right? It's just that the US yields are coming down, and people who are long dollars are probably covering them, getting squeezed a little bit for the real short termers that try to buy dollars on the Middle East situation. For the time being, I don't think much more than that. But I think going forward, and this week could give us a hint on those US Treasury bond issuances, and I reckon there's a bit of information to gather from that. By the way, I won't be around. This is my last day of the week. I need to travel for a few days, but you guys should pay attention to that.
Yeah, thanks, mate. Thank you very much. Ali, I assume your profit is already in. Let me have a look. 147.87. Okay, I thought it was 148.87. Yeah, I mean, you've asked markets nowadays are difficult to trade. Well, I don't know a time when markets have been easy to trade. If they were easy to trade, we wouldn't be sitting here. We'd all be sitting with our feet up. You've got to take things in two aspects. Okay, we've had a busy data week. We've got a fairly quiet data week. There's not a lot in the pipe until we get PPI tomorrow, and then more so CPI on Thursday. In between all that, yes, we have got this situation in the Middle East developing, which the market already looks like it's over, bar any increase or spillovers yet to come. So it can be difficult to trade. This is part and parcel of trading, unfortunately. You know, we're not seeing huge moves, although euro dollar's making a bit of a move up. We'll have a look at that in a moment. I mean, dollar yen, it's still a bit volatile. You know, we had this move lower overnight or yesterday evening into the morning. That's come purely on the back of that drop in US yields, which potentially shown that maybe we've topped out in yields. As we thought yesterday, there's probably a reaction to all the Middle East news in there somewhere. It just, now we have to wait and see whether that's going to be sustained or we get a bit more of a push up. Whatever it's done, it's solidified the top up here for now. But I think it's part and parcel of what we've seen of late, that you know, we were playing the higher for longer trade. The market's suddenly believing that that's a real thing, you know, after the last FOMC. But that can only be priced so far before, you know, the market says, right, well, we've priced that enough. So that's potentially helping market topping yields. For dollar yen, though, I still think rallies are going to be hit harder than the dips bought, but there is going to be willing buyers on the dips. The price action, and if we take it post the big move that we saw after jolts, you know, we are happy to nick new lows, whereas the rallies are getting a bit sticky. I don't know whether there's still anything to go at this 149, 20, 30 area. You know, that was the area we saw directly after that move. Whether there's more to be done there, I don't know if it's all been done since then, but that's the area we're going to be looking at as a first potential marker for any rally we see in dollar yen. Back above there, then we're probably looking back at these highs in the 50s and then up towards 150 again. For the downside, it's still not clear in my opinion. But going back to your question, Ali, quiet markets, finding it hard to trade. Yeah, it is hard to trade. I don't know what to do right here and now in dollar yen. So all I'm going to do is I'm going to set my chair out, if you like, at 150 and 147. What it does in between here is just a show. I'll see what it wants to do. If we get down to 147, that's my area I'm going to be looking at. If I want to do something, I'm either going to try and buy it or maybe sell a break of it, depending on what the price action looks like. On the other side, 150. Okay, so if I have to sit on my hands for a day, 2 days, a week or whatever, because this is just pissing around in the middle, so be it. My interest levels are 150 and 147. I'll sit back and wait for those levels. I don't have to try and go and rush in and pick trades that may or may not work. That's what I tend to do when things are quiet in between the big events. So euro dollar, as mentioned, we're having a crack now at these highs. We had one go off the first bounce from 105s at the 106 at around about this fib area, which was also a bit of a support point naturally on the way down anyway. So this is your marker here. Break above there, then maybe we are going to get a move up towards 107. I shouldn't think it's going to be a fast one, but we'll wait and see. What's happening down below, though, is that we're just, as you can see, stepping off these lows now. We had that little move down on Friday over the data and stuff, knocked it through 105 again, but not for long, back above. Then we had to chew through the 30s again. Now we're sort of holding it as support. Now it's got something to build on. You know, we always talk about catching knives and the price action that you want to see following a period of a price moving down. New lows, new lows, new lows, new lows. All of a sudden, no more new lows. Now we're starting to step up the lows and we're making higher highs. So that's the price action you always look for. You know, that's what you want to be looking for back here. Now you've got confirmation here. So this is a point, as I say, if we break above here, we do have some intermediate lines, 106, 30, 40, then up towards, 70s, getting towards 80s. But 107 is really going to be the number up here and the test as to whether this trend is turning round at all, because it's been pretty strong so far. So we don't know. Could be a fake, could be something more solid. As mentioned in cable, again, similar price action. For now, it seems like we've stopped going down and we're building a bit more of a base. Doesn't mean everything's over. You could see similar sort of picture around here. You know, we had a bounce, but it didn't last, and then we went lower again. But the structure here just looks a bit more stronger, just on my experience. I haven't yet stuck in any fibs because we're probably quite far away from the nearest one anyway, probably around that 124s area. So still got little steps to get over to start really showing that this trend is turning around. If we can't break above these sorts of levels, then it does keep the downside in play, or at least maybe a period of consolidation we see from this point. Dollar China, it was heading its way south before we got that bounce in the dollar this morning, and then the Chinese stimulus measures, which once again, when that headline popped, we actually saw China strengthening on that. So as mentioned before, we switched now from easing isn't bad for the currency, doesn't weaken the currency. It's seen as a sign of China doing something about the situation and looking to move towards growth. So now it's seen as positive for the yuan. But I thought we might be on our way on this break of 728, but lo and behold, can't get through 727, and now we're back up near 730s. So similar price action as I'm talking about in cable. You need to see the minor levels breaking and holding. If they can't break and hold, then potentially you've not finished with the trend. So China on the wider basis, you know, we're not dropping significantly from these highs, and that's caution for me being short in this pair. Still happy to stay short, but I need to see a breakdown. Again, just some stepping up of the lows for now. So we're not out the woods yet, but if the data improves as it has been, if the market takes things that China isn't disappearing up its own backside, that should equate to some yuan strength in time. Hopefully my pockets will last that long. Kay, you got any bits and bobs you want to bring to our attention? Go through a few.
Sure, mate. Yeah, it's not the woods in dollar China, mate. It's a big forest.
I need a bigger axe.
So we are not out of anything yet there. I continue monitoring it, and every time I see a move there, anywhere somewhere 727 and then 730, I said, like, oh, maybe I should get involved somewhere. And then the next move brings it back right into the middle, and it holds me back from doing anything, you know. Right. So seeing this. Let me put the 1 hour perhaps, but it doesn't change much. Seeing this jumping up and down of the differentials between the euro and the US yields, and that is quite funny because we saw similar action to the other side. When the US yields were rising sharply, the euro yields were following, the sterling Canada yields were following, and now that the US yields are coming down, the European yields are following as well. So as a result, we're staying relatively quiet in the middle, and that's why I'm thinking that these moves in the euro are, yes, US yields driven, but also just backlashes after that labor report, and then the situation in Israel. Shorter term positions getting managed, taken out. I don't know whether there's a lot of longer term people involved right now. I wouldn't be surprised they are not as we speak. But, and that was what I was talking about. I think the US 10s are very close to decision time. So there's going to be two levels. In the first one, we are on it. And that's going to be your 460 to 463. And we're trading right now around the 467 level. And not saying it's going to break, hold, whatever, do much today. But tomorrow we have PPI, the day after CPI. We have those US Treasury auctions. All right. So I guess we are going to be moving in these US 10s in the upcoming days. And rather than having like a lot of dollar positions right now, where I think we are, if you want to trade the range, we may be at a couple of interesting levels, whether it be cable or euro dollar. I'll have a look at it, or even stuff like the Aussie and the Kiwi. But just note these trend lines here. If we would get a break, then your next level, which is likely going to be maybe even more psychological than those trend lines, because it's always tough to really trade bonds which are influencing the yields. I don't know. I haven't looked at the bond market. I'm not sure if they're exactly showing the same levels. It's always a bit tough to really pinpoint levels, but I think this 460, 465 is going to be important, and then the 450. Okay, if ever, because the 450 is also where we jumped up from. This is your last springboard, end of September, before we went up to those levels around 419 in the US 10. So the 450 is going to be perhaps even a more psychological level for the more medium-term traders. So those are your levels here. And if they start to break, they really should affect the dollar, I reckon. So keep a close eye on what's happening in the upcoming days to those yields. Okay, they are going to really affect the dollar. And what has been trading very well over the past few days is gold. We have seen this rampage higher from those prior lows, actually, not too far from those prior lows. Started to move up again, but then I said, to me, that we are in the gateway zone somewhere. If this breaks above 1870, then I think we're going to have a rapid move back to those prior lows around 1885, possibly a move up into the 1900. Therefore, again, for further development, I would watch what happens on the yields, and also, unfortunately, what's happening in Israel or the global Middle East. If the tensions continue to rise, gold is going to be a hedge for sure. If things in turn quiet down, and if those yields start to hold, then perhaps we are going to have a more corrective move, which should bring us back to around 1840 for a starter. So that for gold. Silver banged his head against the 22 zone, as we have already seen, right? So that's your level here around 22. Keep that in mind. And then if we start to get back higher, I've already told you 22, 25, 30 and 22, 50, 22 and a half somewhere. If that moves back through, then it's probable that we have seen really a confirmation of the bottoms here in silver, and we start to move higher. I do think that if we get a move back down here, we are going to find buyers again, especially now. If you look at China, seemingly wants to really do something to relaunch their economy, and if you have better numbers like we had on the labor report out of the States, an industrial metal should, in theory, find bids on dips or drops as well. On the euro, well, we're here. This is the cable. Oh, then quickly on the cable. To me, it's still that level. I know people are watching this 70, 75. I think the short term has a bit of resistance here, but to me, the big level is still 123. The figure to 123.20. That is the key to me. And on the way down, if we fail to get up there, or we start to turn around, or the US yields start to turn around again, then we're probably going to range trade for a while with the zone around the 122 as a bit of a pivot, give it to 121.80 as a bit of a pivot, and mooching around in this zone in a like 250 point zone range for a while.
Just before you flick off that one, mate, I don't know if you've got it on there. I've just stuck the FIB on from the when was it, from the July high to the recent low. The 38.2 I've got incoming around our magic number, 124.5. I've got it 124.59.
From the July high, yeah. Oh,
yeah.
Yeah. As I said, but it's there, you know. But you don't see it. It is 124.60.
Yeah.
Something.
Not going to
59
argue
is
over
that
it.
close
Yeah,
enough for government work, I'd say.
yeah, right on that magic.
Oh yeah, that level. And if that 123 figure 20 goes, this is a target area, huh? Undeniable. This is undeniably a target zone between 124.5, 125, around there. This is going to show up again if that 123 figure 20 goes. That really is going to be a magnet again, I reckon. It's a nice move, right? If you start to break. I don't think it's, unless you're like a really big dollar bear right now, and you think it's going to break and you're already in the position, you're long cable, it's going to confirm what one thinks. Personally, I don't find it too useful to start to buy now and going to look for a break, because if we just get there and go back down, it can go equally as fast, right? So I'm just going to monitor that level. But if it breaks, it's going to be an accelerator. That I am pretty convinced about. And in the euro dollar, we are having those similar kind of levels. The picture looks a little different, but the kind of levels where we are at now are pretty similar. First of all, you have the 106.15, 16. This your prior lows here, prior highs here, and we are testing them again. Depending on what's happening to the yields, and depending on what's happening to stock markets as well, we could see a move through. But then, similar as in cable, to me, well, that's my personal opinion, of course. The real level is going to be 106.40, 45. If we start to get back above there, then I think there could be this acceleration, a bit similar as we see in cable. This acceleration up to yeah, well, mid 107s at least. So this is something to really monitor. Does it have to happen? Am I looking for it to happen? Not really. I think we are going to more range trade, but I would not be surprised if this afternoon we take out those we take out stops above those levels, because there must be stops above 106.15, 20, right? And then have a look into this 40.50 or so, and decide upon it. That's just how it looks and how it feels right now in the market on all the dollars. If you look at the Aussie, for instance, we're having like similar kind of setup, you know, around 64.30. And then if that goes, then I'd argue that the bigger zone lies around 65, you know, and those are all like levels that could see stops taken out, and then we go into there, and then all of a sudden the puff comes out of the market, and we start to actually do what we were doing before. Because I mean, I've never liked the term US exceptionalism, but I still don't see anything in the numbers that warrants a much lower dollar from here. That is at the actual situation for me, at least. On the Kiwi, the Kiwi is still pretty strong, although it started to stabilize versus the Aussie. So now we are more like in a situation where we traded relatively like the Aussie, but we have to acknowledge that it's been behaving relatively strong. So this 59.90 has always been a bit of a pivot zone, and I'd say look at where we are on closes. 59.90. If you're above, then there is this potential, which is then going to be your level that we saw on the other pairs as well, around 60, 70, you know, and then 61.30 above if we continue to go. But again, is the dollar really showing us that, or the data at least don't show us yet that the dollar is out for the count, right? I need to have a look at the S&P, because we saw this pretty sharp move up. So there's two things. Are we through this 43.30? We are, but we still haven't really tackled the 43.5, which is a bit of a little bit of an additional level to me, and it shows up somewhere in the short-term move as well. If the 38.2 comes in around 43.57, okay, it could still be short-term noise. It could. But on the other hand, we've seen a very, very strong reaction on the 4200 level. Okay, so yeah, over here I'm not going to get too involved because I don't know what's going to happen to those yields. But we are on interesting levels. It could run out of juice and then at least go back to 43.75 or so, 70. 42, 70, 75. If we start to break that 43, 50, 57 zone, and it's actually a prior low here as well, then we're probably going to raise back into the mid 44s. But it's all like, you know, it's all you see. We are very close to interesting levels thanks to those yields, right? Dollar yen, I'm not going, as I said yesterday, I'm not going to say too much about it. It's really, it doesn't tell me too much. It just tells me, well, it tells me either what Ryan is saying, that we are finding the caps around 49.10.30, but it's also telling me that when the other dollars are going down, this one is not going down. So I mean, it's very, I think it's very undecided, this dollar yen. I'm still running my option until tomorrow. I'm just trading it around. I'm really not inclined to really take a directional trade on the dollar yen. What there is though on those yen crosses is that they do not want to stay low and continue low. That is something that we need to acknowledge. And I think Suzuki did more harm than good there for the yen. Overnight, helping those yen crosses go higher, and they will affect your dollar yen, right? If nothing else is going on, and if we have to wait for the PPI tomorrow and in the US and stuff, if in the meantime there's no other catastrophes, your cross yen seems to be the one that is underpinning the dollar yen pretty firmly. If you look at sterling yen, the dump it had, it's starting to get back to levels where we saw before. Again, I'm not really inclined to do much with it right here and now, but it's just a fact that we need to acknowledge. Okay, yen crosses cannot stay low, and there's one where the market has been focusing on in the past few weeks is this very long-term trend line in the Kiwi yen that rejected the other day, and the market thought, okay, we are now it's end of the party, we are going lower. But then look, the support trend line is holding, and we are already back to that very long-term trend line. That again shows me that I really don't want to counter trade too much of this yen weakness. Those crosses are a bit too strong for me. And with that, Mr. Ryan, I give it back to you, and I wish all of you guys an absolutely excellent rest of the week. Stay safe. Don't do anything stupid. I don't want to hear any horror stories on Monday. Yeah.
Yeah, thanks, mate. You have a good trip yourself. Yeah, I think sitting here now, I'm more likely to be a dollar rally seller than I am a dip buyer at the moment. I know that's not what you're thinking, Austin. But I feel like this spurt of dollar strength, yield rising that we've seen maybe at a bit of an end. So I'm leaning on the side of selling rallies. I was gutted because I was long euro dollar from 105. I had my trading stop yesterday at 105.20. The low yesterday was 105.19. I got knocked out and didn't get a chance to get back in. So I'm going to watch this one go without me, it seems. But that's my favour for the moment, bit dollar rally seller. Anyway, Kay, have a great trip, mate. Thank you to all our listeners and viewers and watchers for coming to the Flow Show and supporting us here. I will be with you tomorrow. Yeah, have a great rest of your day. Take it easy, trade safely, and we'll see you all bright and breezy tomorrow. Cheers all.
Ta-da.